Dear traders, ladies and gentlemen, welcome to our daily trading webinar series. Today it is Friday, the 3rd of August. We want to look at the markets with you and also in this hot and steaming weather, maybe find new trading ideas with you, have a look at the markets and answer your questions, of course, live in the webinar. Before we begin, please have a look at our risk disclaimer. With Admiral Markets, you are trading with leveraged products. You should always be aware in the risks trading leveraged products. Admiral Markets also advises you to use a demo account before trading with live products in order to learn what risks are involved in trading with CFDs. Yes, and every Friday it is Dirk's turn to look at the markets. Hopefully also at the end of the week you can find a few nice trading ideas, Dirk. I will give the monitor to you and then we can start with the webinar. So you will become moderator right now and you will get the microphone. So let's begin.
Yeah, good morning. Good morning, guys. Friday the 3rd of August, as we already know right now. And the DAX is not tanking anymore. But if you have a look at the weekly chart right now here, and remember the last trade setup from last Friday I gave you, you made probably 100, 120 points. If not so, you maybe did something like a 100 or even 80 pips, 80 points, sorry. Possibly. If you have a look at the webinar from last week, just you will find that stuff at the YouTube channel. Have a look at the weekly chart right here. There is a Fibonacci research from the current last low to the current high. And of course, these are really pretty ugly fat candles, but just in case, I will be probably shifting that into the daily and 4-hour chart later. Just for have a look about some really interesting levels, we will just insert a couple of lines on top of that, just to draw in important levels. You see the 50%, so the 50% level of this Fibonacci retracements here, of this Fibonacci analysis here, and that we are already tested that one in this week, and that we are hovering around this ascending trend line. Where does this ascending trend line come from? Just zooming out of the chart and just have a look at really old levels from the last low. Actually, this one somehow scratched to the downside, however it happened. Let's have a look. All right. This is going more to the downside, of course. We are going to the daily chart here right now. Zooming in a little bit and have a look at other interesting levels. And we'll be checking out that with the Fibonacci retracements here from the last low to the last upside here. And we're checking out this next levels of interest, possibly down to the 61.8 level here at 12,400, assuming that 12,400 just as a round number. Of course, we will insert a couple of other indicators first to check out if there's something like oversold territory or overbought territory. Overbought, I assume not. Oversold, not yet. Even not on the daily and even not on the 4-hour. And even not on the 1-hour chart. So we'll be deleting that one here as well. And checking some indicators like the moving average. So you see moving average 100 and 200 lines, just checking out where they are just hovering around. And this one here is around 12,763. And doing it that way here right now, just checking that with the 100 MA, so that one is right now in test at that level around 12,600. What happened to this little DAX from last week, for example? What happened in the last days? From 1 second to another, from one day over the night into the Asian trade, there was a kind of new scenario. You may already know it because of those trade war stuff, trade conflict stuff. And we got some trade deficits talks between US and China again and again, and so that's why the US administration was talking about possibly checking out if there if they could be, they are considering 25% on those 200 billion volumes of imports from China. So this is the reason that the market got into the risk-off mode. And you see that as well in a couple of other trading goods like Euro-US dollar, or even the cable, or a couple of other currency pairs. Most important is the US markets. If you have a look at the market watch, the US markets didn't follow that one. We are still, if you look at the Dow Jones, for example, or if you look at the Nasdaq 100 or the S&P 500, we're still close to those record highs, or close in touch to get to those record highs. Remember, S&P 500 is not too far away from the record high. The NDX, or the Nasdaq 100, went upside just because of two stocks, and they really slammed the gas yesterday. If you have a look, for example, like two stocks, especially Tesla and Apple. So what was going on with Tesla, for example? Check Tesla stocks. The Tesla stock really made a couple of shorties. They really got grilled, let's say that. Tesla short sellers, they're now sitting on a paper loss of close to 2 billion after this stock rally. While we are talking about that Tesla stock, we will be showing that one here as well, just to give you guys a little bit of a heads up on that stock here. Chart window, and see what happened. This huge spike here. And there's a huge gap. There's a huge window to be closed someday, just in case that happens. And if some shorties still have the power to do so, and they will be trying to get the stock down here to this open gap, where you can see that one here. Why is it not working? At 302.94 though, so that's a lower gap. And low gap area, which is to be closed at that level. So just in case of that really happens. Remember that I talked about that Facebook gap as well. Not yet closed, of course, but it turned around a little bit. Let's see if it has still power to really try to close that gap, that huge gap as well. What happened yesterday as well was the Apple stock. So the company of Apple is the first private company which has a market cap over $1 trillion. So that's $1 trillion is really nothing you can scream hooray about, because it's just a company. The stock went up, and the products and the revenues all do kind of justify the price. It's still a company to go for. And if you assume what is going on with some rivals like Google, like so-called Alphabet company, Apple and Alphabet will be taking part in a big rival game. It's the so-called Pay world, so Google Pay versus Apple Pay, and just think about what will be happening in future about the next years and the next decade to come. If that is going to be spread more and more, one day you will just use your mobile device, your cell phone, as a credit card, and all credit card companies make no sense anymore. Okay, going back to the indices and kind of couple of currency pairs. First of all, we will start with Euro-US dollar. This morning's let's say jump down to the road will be having the support 1 first here at 115.55. Let's just have a look at a couple of informations I wanted to give you besides that. Just to target rate probabilities, excuse me, the target rate probabilities for the next Fed meeting, they're around 93.6% right now. So we probably have a target rate between 2 and 2.25%, and in the coming month, into direction December and into direction to January 2019, we are probably even hovering around into direction 2.25 to 2.5% of a target rate. So that Federal Reserve will be hiking once or even twice this year. So you might be fastening your seatbelts if that really happens. The euro might be a little bit on a crosswinds and going down a little bit more. Where could it possibly get tracked to? Let's have some projections to the downside here. Check the last level, the last low, and the last high, and just projections to the downside here. And those projections will be at the 138.2, which is currently close to 114. And another level will be the 161.8, which is at the level of 113.35. First of all, today's strategy could be, oops, I wanted to change that to the 4-hour chart. Today's strategy could be try to go to a rebound and try to, yeah, let's say try to catch this last knife here and to get back to a level of 116.20 and to a level of the 61.8 level, which we see here, and is especially on top of that the pivot point at 116.11. So this might be the first target for a long setup, for a long scenario right here, between those, the pivot point and the 61.8 level. Next level to go for properly, some kind of a strategy would be just to open a trade, to take the first half out, to move the stop loss to the entry, and get the next half of the trade up to the resistance 1 level or the 50% level between 116.40s and 116.50. So this could be some kind of a reverse. Why am I saying that? Because today's non-farm payrolls and US labor data is going to be published at 14:30 CET. The last day of the week, of course, the euro-US dollar, as you can see from the top to the downside right here, made a couple of points, a couple of pips. See that the high is 117.45 and see that the low is almost 115.60. So probably very close, getting closer to a 200 pip move. Wouldn't be too bad to just cash out some winners and going into the weekend. Just thinking about those shorties if they do so. And probably this will be a surprising non-farm payrolls data and will be maybe supporting euro-US dollar this time. You never know. Things might change. It won't be running. It won't be running on steam forever. Of course, the FOMC, so the Federal Reserve Market Committee, and all the participants, they were talking about the U.S. Labor market, that it is really running on a huge steam, really strong, and that labor force in some areas will have some trouble to get new labor, new workforce. But in case of that, we will have a dip there, and that the numbers from the last month maybe revised down. Possibly, you never know. Euro-US dollar could be going up to 116, 160.50, and direction up 116.50 upwards again. Just in case, we'll be doing that with a so-called pending order. We'll be doing that even if you like. On the one hand, you can do that old school way. So just dragging that, of course, with a new order with the order window. On top of that, you can do that with getting to your navigator. If you don't find things like that, like pivot points and stuff like mini terminals, market maker, manager, or session maps and stuff like that, you might be having an old version of MT4 here and might be uploading a little bit of stuff and download the software. You will be getting that at the admiralmarkets.com website. If you can't do so, you might get some help from the help desk. Just ask them. There's even on top of that, there's a chat window. You may ask your questions, and one of the Admiral Markets guys will be answering you very shortly. Okay, I'll just open that mini terminal just in case you don't know that one. Let's see what happens. As you can see, there is an order ladder opening up, and the so-called mini terminal window is showing you the abilities to open trades always with the same amount of a lot size or with the same amount of a stop loss, with the same amount of a take profit, and so on. So you probably do that to the left side, typing in that stuff and pressing the buttons sell and buy. Of course, you can do that by choosing your level of, for example, a buy stop here. Let's say you go down and wait that the euro-US dollar dips again and dips, for example, to 115.70. You will be choosing that. I choose to buy a limit. I choose the lot size of a mini lot. You will be checking that out, and will be trying to find that positions targets I was talking about at 116. 1640, between 11640 and 11650. So you will be seeing that you will be having something like a 65 euros win with that one here. And of course, don't forget to place a stop loss because you are in a buy limit. You need to go to the downside and check out how much you're about to risk. Let's say you just risk 20 bucks. We'll be stopping that at 115.45, or even give it a little bit more room to the downside, like 25 bucks or 26 bucks, like that. And the whole thing is placed in, and you will see that there is the buy limit, there's the stop loss level, and then there's the take profit level. And just in case you are not, you do not like the trade setup in a couple of minutes or in a couple of hours or into the direction of the opening of the US markets, you just take the right mouse and just modify or just delete it. All right. Before we get into another currency pair, let's just check out what is going on with a couple of other stories I wanted to talk about. Let's just have a look. I'm checking that out at another personal computer right here. I got another screen here. One thing for sure, if you are talking about, we are still in the euro-US dollar topic, if you are talking about this US dollar strength, if that really continues, and this currency pair, after it failed to break down to this 115.08 level, this old level, then we will be getting back up again. So we will be staying in that kind of a euro-US dollar window, which was hovering around the 115.08 marker to the 118.50 marker. If you remember that, going to the daily, you see the last low here. That's the low of 115.071, so 115.08 approximately. And the last upside was at 117.90, so we'll be hovering back if we don't get a breakdown here and don't get a break to the downside in direction of the next projections I already drew with that horizontal lines here. That has nothing to do that we are now in a long setup. The only thing is it depends which kind of time frames you are trading, and it depends what kind of strategy you try to picture. So let's see what the market does with a couple of other goods. Especially there's one thing which is running into the direction I already spoke about last week. It is gold. We see that one. That gold is almost close to that level, to that projection level I just placed here. What's going on? Just widen that one. Now it's going. So it's 1202. That was the old projection level at 138.2. And the next target to the downside was close, very sub the 1200 marker. We are not going there yet. Might be getting some little bit of a relief rally here in gold maybe today. Possibly in direction to the US markets, or a little bit just like around the non-farm payrolls. It all depends, of course, how euro-US dollar will be treated. If euro-US dollar is going to the downside and it's really going to in direction 115 and sub 115, gold will be rushing and will be following down sub the 1200 marker. Just because there's a correlation between those two goods. So every kind of commodity is being dragged to the downside when the dollar gets stronger. Just in case, let's see, where was that one? Just hold on a second. be looking where it is. I did open that one as well. Okay, I just opened that one, of course, already. Forgot. Very interesting market. We are here at the 61.8 Fibonacci. And this one got scratched. The last 4-hour candles, as you can see, is always hovering around that, and it's kind of interesting to see if it has the ability to get back down again. If it does so, you might see levels like 7,285 and levels like 7,240s in the next hours, possibly into the US market opens the first two trading hours. The other way, of course, will be a spike back into the old level and to the direction of the record high. This would be the second try to get a longer term short. Why? Just in case you may know that it's something like trading on arrows. If you open a position like this one here, like the NDX Nasdaq 100 short, you will be stopped out after 20 or 25 points, possibly, if your stop loss is 25 points. This will be your first trade, your first failed trade. In the next trade setup, you might be trying that stuff again with the same amount of a stop loss of 25 pips, but a little bit more, of course, up the road. If you don't try it, you will never get the chance of getting those points back. But don't do something like a revenge trade, immediately a revenge trade when losing some points that you try to get them back immediately. Just cool down. Just when go back a little bit from your screen, think about the new strategy and new positioning, a new setup, and then just try to plan the next trade. Don't rush into a trade. Nobody forces you to rush into a trade. You're not a trader of a bank or of a fund. You don't have to trade somehow. It's your private account. It's your private money, your own money, and you are the boss. You decide when to open and when to close. So this one is going to be opened old school. Besides, we have, of course, the other one, like the order ladder. Just open this market watch here again. Just doing so with a double click and checking out some like a 2-lot pending order with a sell limit at the price of 7,390s or 7,398, and looking, of course, with a stop loss scenario with, like I said, with the first 25 points. So that might be around this 7,400, and let's say we will stay with 20 points. Let's just do it more easy. So 1895 as well. And don't forget to place the take profit. You will be doing that in direction, looking at the 50%, 38.2% lines here, or even 23.6% lines. Don't get too greedy. Maybe the take profit earlier is not too bad. It's very close to the weekend. Nothing to really lose and throw out the window. So doing some like a 7,200 and 65 here. Be calculating that one, if that is really still in a good CRV, so chance risk version, might be still okay. So then you will be placing that one. The trade is placed, and you see almost the same lines like you see that those ones with the order ladder. Of course, they are not colored like that, but the same work. It works the same, just in case. So you have the two possibilities, of course, to do so, to open orders, or if you see that one, that's the quick version, just press buy and sell, and just check out the amount of the order size. Like this one, we already placed a lot size buy or sell order, and just place the buttons. Another version of doing so. Okay, I talked about a couple of goods right now. Maybe there's a question or there's a special market some guys of you are interested in.
Dirk, if you want, we can have a look at the Deutsche Bank, the DBK stock. That was the only market that was in question. And then I think we have also already used a lot of time already. So if that's the last market, that's fine. We can then send our webinar participants into the weekend after this market.
So let's see what the hell is going on with the DBK.
I already saw it. I already saw it.
Where did I place that one? To the upside or the downside?
Downside.
What the hell is going on? This is all the US stocks. There you go, DBK. Oops, Deutsche Post. Okay, just opening that one. We spoke about that stock a couple of times here in the webinar, and I told you that the stock is not going to the downside. Always all the people spoke about it. All the analysts spoke about it. The more people are speaking about more to the downside, this won't happen. It's like a sentiment stuff. It's like a contraindicator. So the more people are speaking about losses and about possible new market shorts, this won't happen. So widening that one, and just go to the last low, of course, and check out these levels of the last. Let's see if that was really the correct level. It's 1128 and it's 1123. Yeah, that's correct. So just get that one here, maybe to the 4 hour. That's more visible right now, and just try to get this 100% to those candles, where you can see where the Deutsche Bank share might be heading to into the next days to come, just in case of there's some kind of another move up or another relief. Of course, first would be the old high of 1128. We will be talking up the projections just in a minute. Just look to the downside where some kind of next dips could occur. One thing is the 23.6 here, of course, already a support. Next one, 1032, and on top of that, the 50% and the 61.8%, just to mark those Fibonacci retracements with horizontal lines. Don't forget you have on top the Admiral Markets pivot points, so you can enter those ones here, these ones here as well, just in case you might see if there are some lines. Yeah, let's say at the same level, almost at the same level, you can see the old high and the resistance 3 level, almost yeah, building something like a cluster. And just in case you just might check out where the projections to the upside are, just change to the other Fibonacci, the last high. So the last high is that one here, going to the downside, and you will be seeing some next targets like this one here is the 12 level, 12, 12, 12, 12, 13. And just of course marking that one, this was the high of the 24th of April, which is 1220. So 1220 nearly exactly hit it, that one with the horizontal line here. So projections to the upside are at 1349 and 1437, just in case, just to have the full picture of those of these kind of Fibonacci retracements to the upside as well. All right. One thing for sure, if you like to check that out about the next target rates of the Federal Reserve, you might check that out via Google. Just type in Fed Watch Tool, you will be getting those projections. It's absolutely free. It's nothing to pay for. This is all free knowledge, all free stuff. And if you like to get to know more about all these kind of next target steps, you will be able to see that stuff as well at the Federal Reserve website and at the Federal Open Market Committee speech. You will find everything free, and like, for example, PDF files and text files, stuff like that. All right. Hopefully you will be having a nice weekend, a sunny weekend. Right now it's 27 degrees right here, no air conditioning, nothing like stuff like that. 33 to 34 degrees outside today. So you can choose yourself, stay inside, have a couple of good trades, or have a couple of good trades first and then enjoy the weekend. Don't overdo. That's the most important thing. And if you like, we will be hearing us the next Friday at 11 CT. Thank you very much. Have a great weekend. Bye-bye.
Thank you, Dirk, for your detailed analysis and also for the final words of this week in our trading series. Dear traders, if you have any questions, you can contact also your local customer support team. Please just go to your local website, admiralmarkets.de or .com, whatever you need in whatever language you are speaking. We hopefully have a native customer support for you, and you can contact us around the globe. Yeah. We wish you a successful trading day, last successful trading day of the week, a nice weekend. Please don't melt away in the sun so that we can talk again on the next week on Monday. Have a nice weekend. Bye-bye.
Bye-bye.